Get this started. Okay, so as we all should know by now, that basically this coronavirus pandemic has affected all parts of our U.S. nation, to include greatly our economy. But we need to understand that we can't let this define us. Not everyone has to come out losing here. With just a few tips on the stock market and like trading stocks and stuff like that, we can make this stage of our economy a financially good one. We could do this by participating in this and engaging in this thing called day trading. Now, day trading, you're probably like, what's that? Um, Essentially, it's just it just means buying and selling within the same trading day, whether it's common stock or options. It just refers to the time frame. Now, common stock or shares, which is the price per share of the company itself, the ticker price, that just shows the state of the company. The ticker is basically the abbreviation of the name for the company. No one really day trades common stock, given that it's more long term and it's a lower like it has a lower reward to risk ratio. Day trading is more popular with options trading, which is more lucrative given it's like more of a gamble. But that means it's high risk. It's high risk, but it's high reward. So money can come and go really fast. Now, options trading. As far as this, the most well-known ones are called calls and puts. There's also something else called spreads, which is like playing on both sides of the spectrum, but that'll be for another time. So now, calls. It's kind of like betting in favor of the company or the entity. You're basically betting on them doing good. So if they make money, you make money. Simple as that. So now what we're going to do is we're going to look at the stock price. We see right here, it's 476.60. We're going to click on that. It's going to take us down to the stock price. We're going to choose a price point we think it'll go up to. So we'll just say 480. And then we choose a date, which up here we already have April 3rd. So you look at this. This is the premium price that you're paying per share. It looks like a price, but it's called the premium. So you're basically paying the premium per share. So now you buy that, and you could buy 100. You buy one contract, and basically you think it's cheap, but if you buy one contract, it's 100 shares. So you just move the decimal places over. So that'll be how much you're paying. So now here you have two choices. You could let it sit until expiration, or you could wait for short-term profits from the premiums, which is this right here, from that going up. So now short-term, remember that little price, this one right here? That's a premium. As more interest is sparked, more people buy, so the price goes up. So what you bought earlier, what you paid for it, that is now worth more than what you bought earlier. So you could get in, cash out on that, or you could wait and sit for expiration. So if it reaches the expiration or above the end by the expiry date that you chose, you now have the right to buy 100 shares at that price point. So let's say you buy a Tesla $250 call, but a year out. By that time, it's worth $400, but you can buy them at $250 and sell them at the current $400 price, 100 of them. So now the next thing is puts. So puts is basically the opposite. It's kind of like, we'll choose puts right here. Same process, it's just the opposite. So for example, you're basically betting against the company. So if their stock price goes down, you make money. The same process, you just choose put this time like we did. We look at the stock price. Now we choose a price that we think it'll go down to. So we'll say 475. Then you choose a date. We'll leave it at April 3rd. And then you see that the premium price is lower for this one. So that's a premium per share. So now you could wait for more interest to be sparked, so it goes up and cash out like that. So you can basically get in, make money off of the premiums, then get out while you're up, and then get back in when it's low, which is essentially what day trading is. Or you could you could wait till it expires, and basically, if that goes down, if the stock price goes down to the price we chose right here by the expiration that we chose, we now have the right to sell 100 shares at the price that we chose, which is this one right here, the 475. So now, for example, let's say it drops even lower than the price we chose. Let's say it drops down to 250. You can still sell them at the higher price point of 475, 100 of them. So that's where the profits start rolling in. So this basically is where you start to realize how greatly the news impacts the market. This hobby will not only make you a more informed citizen, but a more knowledgeable investor. And the reason I say this is because literally everything that goes on in the news impacts the stock market. For example, when Trump was giving the national emergency speech on CNN live broadcasting. I actually had my phone out to check my indexes while he was giving the speech, and the market went down, tanked as he said the words national emergency. But that's good for me or an investor like me, because someone who has puts, it would go down because you're betting against them. Not only has this worked for me as a source of income, but it's also helped numerous others in my trading entity group chat. It's called Options on Wall Street, where we basically discuss and send out signals on what to buy. One member of mine actually, because of this day trading, he was actually able to pay off his student loans, and he actually bought a Tesla. And another one, he was basically like very grateful and thanking me and other administrators in the group because like during everything going on right now, this pandemic, he's been able to stay afloat and pay bills basically because as the economy is doing bad, he makes money. So whether it's calls or puts, if one thing goes down, another financial instrument has to go up. Not only is this a good hobby, but it's a productive way to take advantage of the economy, and especially right now by coming out on top and not letting it take you under. Thank you.